I would like now to introduce today's presenters. Michael Jensen, Chief Research Officer, guides the practice's research agenda and architecture by leveraging his extensive experience to identify and unlock emerging trends. Sakshi Garg, Vice President, leads multiple engagements with enterprise buyer clients in the areas of location optimization, shared services benchmarking, peer intelligence, and talent strategy. Prashray Kala, Vice President, is a member of the global sourcing team and assists clients on topics related to location optimization, enabling talent models for digital initiatives, increasing inclusivity and diversity in enterprises, quantification of business impact, and benchmarking of global delivery models. And with that, I would like to turn things over to Michael.
Hello, everybody. Today, I wanted to start with a kind of a macro update, and then we're going to jump right into the numbers. From a macro standpoint, we started out the year with a theme of pent-up optimism. And what that really meant is the lockdowns and the things that we've experienced over the last 12 months, there's going to be a likelihood of that really bursting of energy into as we get into the later half of 2021. If you look at the facts, the COVID numbers are getting much better. They're not where we always want them to be, but hospitalization is the number I like to look at, and it's down to, depending on where you're at, half to almost 2/3 from where it was toward the beginning of the year. The vaccines are coming out. We're going to be swimming in vaccines here sometime in the summer, but they're coming out faster than we originally thought. Economic numbers are looking up and better, and the stock market is booming. On the cautionary tale, because we are starting to see that pent-up optimism start to come into our supply chains, there's some shortages that we need to worry about. Chip shortages are the most obvious, but even just getting container shipments from Asia is a bit of a challenge. With all the flurry of activity that's now starting to appear, we have inflation and interest rates that are going to be create some caution, and then obviously the variants of COVID. Do we see a resurgence there? So with that kind of backdrop, I still like the overall theme of pent-up optimism. And so today, what we wanted to do is get your perspective on how you think things are starting in your organization for the next 12 months here. So let's open up a quick poll, and we're going to start with, what are your expectations for your organization's growth? And that is going to depend on your organization, but it could be done in terms of revenue or scope. But how do you see 2021 shaping up in terms of your level of optimism in terms of revenue or headcount growth, scope growth, things like that? Okay, lots and lots of votes coming in. Got a really nice size participation in this. All right, we'll give it another 3 seconds. All right, so let's go ahead and showcase the results here. All right, so certainly way more on the growth side of the equation. There are a few folks out there expecting significant shrinkage or reduction, but way more, let's call it 66% on the 2 to 20% growth. So the 2 to 10 is the most popular, but 11 to 20. And I'm encouraged by seeing this. I mean, I think this overall sense of optimism is really kind of weaving its way into both our economic, it's weaving its way into our social, and I think that's really, really good way to think about as we go into the numbers for today. So with that, let's go ahead and Prashray, you're gonna talk a little bit about what do you see in the numbers with a year with COVID, and how did the 2020 how do we do in 2020? And I think you're going to show some numbers here that are not, as optimistic as what we just saw, but certainly not as pessimistic as we could have had.
Sure, absolutely, Michael. And as you rightly mentioned, I mean, a year ago, nobody could have imagined the disruptions of 2020, right? All aspects of our life, personal, business, got significantly affected. The way in which we work and interact with people also changed significantly. But when we really look at the year in our rear view now, no one could have predicted the amazing resilience which the industry has demonstrated in the times of this global crisis. If you look at the global services industry, it has grown by approximately 2% to reach $216 billion and a headcount growth of approximately 3% to reach 7.5 million FTEs working globally. And this in comparison to the world economy, which shrunk by 5%. So we really see that the sector has outperformed most other industry verticals and has been a bedrock of the comeback of the economy, as we do expect in 2020 and onwards, right? In the next page, we'll break it down into the two various aspects of the global services market, right? If you look at outsourcing transactions, there has been a growth in outsourcing transactions. Yes, the growth has not been as high as some of the previous years, but we did see about 1,899 transactions last year. If you look at the number of in-house GBS centers which are set up last year, we had 126 new in-house GBS centers set up. And even for the existing ones, we know that they expanded in headcount. So both levers, outsourcing as well as in-house delivery, saw growth in last year. And it has formed the basis for outperforming, as we do expect it to do in the year 2021 onwards.
All right, so onward and upward in terms of the macro numbers there, both on an outsourcing basis and GBS setup basis. So actually, let's take a look at the demand side of the equation here. What did you see? Where's the demand coming from?
Sure. So in terms of the sources of demand, let's break it down first by industry vertical. There are some mixed trends here in certain verticals, but what really stands out is the decline in the retail and CPG vertical in terms of its share in the global services, new deals and GBS center setups, and the growth in technology and communication and the share of that vertical rising. And if I look back and try to correlate it with what's happening globally in these verticals, some of the trends possibly answer the decline as well as the growth trend. If you look at retail and CPG vertical, it had a mixed sort of a year. The essential retail and CPG sectors, they did well, but the non-essential really were hit. We also have been hearing about many of the retail and retail companies filing bankruptcies, be it Pier 1, Neiman Marcus, GNC, JCPenney. So many of retail companies have filed for bankruptcy in 2020. So that sort of answers in some ways why retail and CPG verticals saw a decline. There were too many distractions, as Michael alluded. Supply chains are still not completely tight, and they were not up to the mark to deliver the demand trends of 2020. So that has led to decline in terms of retail and CPG vertical. If I look at technology and communication, the growth is really coming from the high-tech sector. And our definition of high-tech is pretty broad, but think of all tech and comm companies apart from telecom companies that will form in that high-tech sector. And I was going through some of the global trends, and what I found was in 2020, more than half of the world's population now uses social media. So the number of social media users globally is more than the number of non-social media users. Global internet traffic grew by 30% in 2020, which is significantly higher than any previous year. And if I just talk about US, the data usage on a per family basis, which was about 12 gigs in 2019, increased to about 17 gigs in 2020. So again, a significant jump. And all these factors are contributing towards the growth of various players in the tech and comm sector, which has led to increased need for outsourcing or insourcing in these verticals.
Was that growth on the internet there? Was that your daughter with Zoom videos for school?
I'm sure she has contributed towards the growth of both demand of data and internet usage, and all the school kids have done that.
Yeah.
Let's look at this demand in a different way in terms of which function saw majority of the deals. And if you move to the next slide, we'll see that there was a revival of ITO deals particularly. And if you see this chart, 2017, the share of ITO only deals was about 82%. Then it sort of declined slightly over 2018 and 19. But in 2020, again, the share went up. And when we analyzed the deals, what we really found was there were two main drivers which led to this growth. Number one was increasing demand for digital transformation, and also the increasing demand for cloud, cybersecurity, and workplace services. So again, ITO deals are increasing. BPO continues to kind of stay in the same average range, though 2019 and 18 were kind of better years for BPO providers and in terms of BPO deals, but it's clearly an ITO revival story as far as 2020 is concerned. Let's now talk about, go further into this and see how the large deals stand out. And Prashay, why don't you talk about what you saw in terms of large scale deals?
Sure. And yeah, just a while back, we were discussing how we did see increase in deals in 2020. What's really unique is that large outsourcing deals are back, right? If you see 2020, the base seems to have gathered momentum for these 100 million plus deals, despite the pandemic, right? We saw 71 deals of more than 100 million, and the average deal size, if we see, has increased significantly. This is one of the sharpest growths which we've seen in the last few years. The average deal size for large deals has reached about 528 million. Now, digital transformation initiatives has been one of the key drivers for many enterprises to sign some of these large deals. But what is also important factor is cost optimization, financial pressures on enterprise to monetize their non-core assets, and very importantly, also vendor portfolio consolidation, which really drove enterprises to sign some of these mega deals instead of multiple smaller deals, right? There are multiple examples of billion-dollar plus deals, Daimler, Infosys, Vanguard, Infosys, Phoenix Group, TCS, and a lot of other places as well, where we saw large asset leverage opportunities which service providers latched onto. And yes, many of these deals saw a transition of headcount as well, and that we expect will remain a flavor of deals going forward in 2021 as well, as organizations decide to restructure and refine their global operating model across their in-house as well as outsourcing footprint. Now, while we did talk about how service providers have gone after the big game here, the next page also talks about how simultaneously they were also building on their capabilities. And yes, the page will flash in just a second. On a capability building side, service providers, again, many of them had cash-rich positions. Valuations were quite low in last year, driven by the COVID-19 disruption. And that really pushed service providers thinking into some of these new alliances and M&As, which they did last year. We saw a decent growth in both mergers, acquisitions, and alliances by service providers in 2020. Key factors which were common across most of these acquisitions and alliances was a desire to augment digital capabilities. We saw a lot of alliances on cloud, cybersecurity, cognitive tech. Some of these acquisitions also were driven by geographic expansion that service providers wanted. And we know that service providers continue to evaluate more alliances in the year 2021 onwards, especially focused on how they can help enterprises with the future of work. If we move on to the next page, Michael, over to you.
Yeah.
In the next.
Yeah, so let me just make a couple comments there. First, we saw the industry, get through this in a very healthy way. So you saw the numbers in the statistics that we were showing there in the last couple of slides. We got through it in a very healthy way. Margins held up very nicely. So we have a very profitable outsourcing industry. And then you look at what Sakshi was talking about in terms of the growth of the GBS organizations. Again, because there is value there, value's being created, those are growing as well. So I know there's several questions on what you guys have asked about different versions of the crosstabs. Those would probably be appropriate for us to answer one-on-one, and we'll be happy to do that. But we can go down, break this data down into lots of different versions. So reach out to Sakshi or Prashay or myself, and we'll help you get that after the call. All All right, so let's move on to the key global services. So we're going to take this down into a number of trends that we're seeing here. We're going to break these things down one at a time. If I look at on the next slide here, what are the kind of the macro level trends? You know, I was the pent up optimism I was talking about at the very beginning. That's creating positive enterprise sentiments. Again, you know, sector by sector is going to be a little different. We have to be very cognizant of the who we're talking to when we're depending on the industry. The vaccine rollout continues to be effective, and you know, there's some risks there, but it's looking increasingly better. The fiscal stimulus across demand geographies continues to be there. Lots of money is just flowing everywhere. The pent-up demand, we talked about digital acceleration. So one thing we'll talk about digital acceleration is many of the projects that we'll talk about here, they're not new. People knew they needed to evolve their businesses, change their businesses. But what the pandemic has done over the last 12 months is accelerate and create more awareness that they need to speed up. And so investments are flowing into those kinds of projects and the need for cost optimization. So that's kind of the industry sector view at an industry level. Let's talk about how the GBS organizations themselves are performing in terms of size and scale. So we think the GBS organizations will play that role in 2021. We think that it's going to not only you know, be relevant, but even be increasingly a bigger part of the organization structure. So let's look at the numbers here. Okay, so we asked at the beginning of the year how you thought your organization was going to grow in terms of headcount. So this is a headcount number. And what we saw here was a muted response across the board. So if we look at the enterprise average or the service provider averages, certainly they are down from 2020. And you know, the good news is they're not down in terms of negative. They're just down from the previous year's growth rate. And I think if we'd asked this question in two parts and said, what do you think about the first half of 2021? And I think if we asked the second half, especially if you ask it now, you'd see two radically different numbers there. But Sakshi, right in the middle of this chart is a big exception to all the things we saw, whether it was departmental or at the enterprise or service providers, and that was the GBS. Talk about that.
Sure. So GBS model demonstrated a lot of resilience in 2020. So riding on the strong success of 2020, it appears that GBS stakeholders are pretty bullish about the market and actually anticipating 2x growth in headcount during 2021 compared to 2020. So 6.2% versus 2.8%. We also saw in the first slide that the overall market grew at about 2 to 3%. The overall global services market grew at about 2 to 3% in 2020. And it seems that this sentiment suggests that stakeholders are expecting growth recovery to pre-pandemic levels by at about 6%, 5% in the GBS segment. So a lot of optimism and bullish sentiment as far as the growth of GBS organizations and GBS headcount is concerned.
So Sakshi, when I look at these numbers here, this 6.2 doesn't necessarily think that the companies are going to grow that big. It's just the GBS is proportionally larger than the rest of the organization in terms of its overall share.
Exactly, and in the next slide we'll talk about which areas they expect this growth to come from. So if you move to the next slide, it is actually a growth story across all the major functions that GBS organizations deliver. So the growth is expected to come from scope expansion, with the primary drivers being IT services and analytics. I think except contact center, which has a slightly lower share in terms of growth and a slightly higher proportion of GBS stakeholders expecting a decrease. All other corporate functions and IT services are expected to grow within the GBS organizations, and that's where probably that 6.2% number is coming from in terms of future headcount growth in 2021. The other aspect of this growth, which is not just about scale and scope, it is also about stature. And if you go to the next slide, what we also expect is that the GBS organizations will evolve their role from being helpers to shapers, or from shapers to leaders. And we expect this role elevation can come from in multiple forms, such as driving the innovation agenda for the enterprise, implementation of automation COEs, or playing a broader role in the third-party outsourcing providers, governance and management. So GBS organizations are not just looking at the internal headcount or the in-sourced headcount, but we expect their role to expand from being a helper to a shaper to a leader, and they may see more vendor management kind of responsibilities. Michael, can you talk about what you are seeing in your interactions with GBS stakeholders as far as this, amalgamation of outsourcing and insourcing within the GBS?
Yeah, so we're seeing a real maturing of this area here. The global business services is now, it's not just where you go for low cost. It's much bigger, as Sakshi was saying. But the other big trend we're seeing here is a real focus on actually managing or using the outsourcing as a lever to achieve the goals. So it's not just, hey, I'm the shared service organization for the company. No, I'm actually thinking about how to think about delivering the function, whether it's insourced or outsourced. And so some of the conversations with senior executives that I've had, and I know others have had, represent, hey, outsourcing is now 50% of the overall share of how the resources are delivered. So it becomes the business, relationship or model, and creating the delivery engine for the organization, the GBS. But it's no longer just, hey, it's a delivery center. It's really a much more of a bigger and broader competency.
Yeah. And Michael, some of the people on the webinar may have seen our 4-stage maturity framework for GBS organizations. And really at stage 3 and 4 of the maturity model, you start to take those vendor management responsibilities. You start to play a role of a sourcing, strategy decision maker and guide your organization in terms of insourcing and outsourcing decisions. And that's where we see the role of GBS organizations enhancing, which will create more scale, more scope, more opportunities, and hence the optimism in terms of growth of the GBS model.
Yeah, it is definitely a different competency, though, to go from an in-source to outsource. I think that will be a growing point for many GBS organizations, that they'll need to learn that competency as we go forward here. But I think it's a real lever that they can use to pull.
Yeah, and I think that's a good pivot to move to the next trend, which is around how outsourcing is likely to perform and going to perform. So over to you, Michael, for that.
Yeah, so let's talk about this. And Prashay, we're going to turn this over to you as you see the outsourcing on the rise, as we just talked about. How do you see that industry performing?
Sure. Sakshi was describing a while back, the GBS side of the house definitely increasing in scope, opportunity, as well as the role. But this has not come at the cost of outsourcing. Outsourcing's growing as well. One doesn't have to come at the cost of the other, right? We're seeing enterprises are actually increasing the leverage of outsourcing as well as the in-house model, essentially all aspects of global services delivery, because they are seeing amazing benefits out of this. And the performance in the last year of both the outsourcing service partners as well as the in-house centers has kind of reinforced the belief that these would be key to enterprises' success and service delivery going forward, right? But essentially, when we look at the revenue, now, despite concerns, the financials of the industries have not fared that bad, right? We are seeing that growth in revenues is slowly increasing. We are seeing a sharp recovery. This was much faster than has been expected by anybody. And while this chart, the blue trend line represents the year-on-year constant currency growth for the leading service providers. But if you would have also considered some of the mid-sized companies, they actually have done well even during the pandemic. So this number would have been even better if we roll this out to a broader industry. And it's not just the increase and the sharp uptick which we are seeing in revenue growth. It's also the book-to-bill ratio, which is here on the orange trend line, right? We are seeing that this book-to-bill ratio has been increasingly steadfastly quarter on quarter, which represents far greater acceleration and momentum. So definitely big signs forward that the industry is going to recover and recover fast. And as Michael, you already described earlier, margins are increasing steadily for the service providers. The large deal percentage is increasing. Some of the large deals signed in the middle of the last year would yield to even more revenue growth 2021 onwards, right? Stock prices of these outsourcing companies are at all-time highs. Valuations are all-time high. And Michael, when we've now looked at the 2020 numbers and we're seeing this expected recovery, what are some of your takes as you see this going forward into 2021?
Well, so the book to bill is key, right? I mean, when you start to see that accelerate above 1, that means you got a growth industry for sure. I think the other thing is that we've seen a bifurcation a little bit of the BPO coming back a little faster than we did on the ITO. So that actually, we can break these numbers down a whole bunch of different ways, but we've actually seen the BPO numbers accelerating even faster than the ITO numbers. So what I'd encourage you, if you're thinking about outsourcing as part of your portfolio, let us know and we can help on the which suppliers are doing fantastic. Not all suppliers are doing fantastic. I do want to say that we're speaking at a macro perspective here, that the industry is doing well, but there are some winners and losers there that I think are worth understanding. And if you're going through a discovery process there, we can help you on that. All right, let's talk about the other part of the dialogue here. So it's not just what the outsourcing marketplace, let's talk about it more at a talent level. And so, when I look at talent, it's always been a C-suite issue. And the reason, at the C-suite, the issue is how do I get the right talent on board? How do I get the right senior leadership? How do I create the right culture in my organization? But then the reality is you also need to fill in all the way down into the organization, you need to fill in the pieces there. So actually, what are you seeing when it comes to how talent's shaping up for 2021?
Yeah, so, we discussed when we're talking about trend 1, how we expect GBS organizations to return to growth, which will be, probably pre-pandemic levels. However, as we can see on this slide, the early indicators suggest that the talent market is going to be tougher in 2021 compared to what we saw as far as talent market is concerned, low attrition levels, not many people looking to switch jobs, relatively easier to hire talent. So compared to that, we expect the 2021 market to be tougher. And this is coming, the data that you're seeing is fresh, coming out from recent research. And what it is telling us is that as far as hiring time for niche skills is concerned, the stakeholders are expecting about 13% increase in hiring time. As far as acceptance ratio of offers is concerned, acceptance ratio is expected to go down. So more time to hire, more number of candidates need to be screened to fill up the same number of positions. And also the voluntary attrition rates are also expected to increase by about 3%. What the segment of the market which is not likely to get significantly impacted or may not behave differently from 2020 is the generic skills, where things may not change dramatically. But as we have been talking about in this webinar, that there is a focus on digital transformation, there is a focus on increasing the role and stature of GBS organizations. Outsourcing transactions are very digitally focused. There will be a higher demand for niche skills. And the early indicators suggest that the talent market is going to be tougher.
So Sakshi, on the voluntary attrition, I wonder if that one will, that seems awful optimistic here, that it's only going to go up by 3%. I think that pent up optimism, that's the one I would be really watching for. Obviously, you got the ones above there, for the niche skills that are going to be tough too. But I think that voluntary attrition may actually start to rise and accelerate through the year.
Yeah, I mean, even in Q4, most of the organizations started seeing upward trend in attrition, which was pretty stable during Q1 to Q3, mostly driven by COVID. And this trend is already, kicked in, and companies are already feeling the pressure of higher attrition in the last 2 quarters.
Yeah.
Let's now talk about what organizations can really do to address these talent-related challenges. And I don't think any of the trends that we are highlighting here are new, but it's just important to recognize that this will be a significant investment for organizations, both enterprises and service providers. They will have to invest in, training and development, accelerating automation initiatives. So basically redeploying your existing workforce from more transactional work to complex work, which helps in retaining, which helps in reducing the demand for talent and really solving the talent problem at the root itself, building a longer term pipeline for talent, and so on and so forth. So expect this to be a big priority for both types of organizations, GBS, service providers in 2021, given some of the talent-related challenges we highlighted on the previous slide. These were some of the things that organizations will do at a tactical and operational level. But if you look at a strategic level, I think what we're saying on the next slide is many organizations will start to rethink or reassess their workforce strategy and make it future ready. I personally have been in conversations with so many enterprises in the last 3 to 6 months where pandemic has led to a revival of thinking around workforce strategy. What this could really mean is that organizations will start to better understand the demand and supply of skills, skills available internally, better assessment of skill gaps, assessment of alternate talent models, just gig, also taking a holistic view of the workforce. It's not just about my internal workforce, but looking at internal and outsourced models and thinking about workforce strategy in a more holistic manner, so that better work placement and better workforce model optimization can be driven. And of course, automation is again part of this talent story as well, where we expect organizations to, at a strategic level, think how can they solve this, talent-related challenges that they might see in 2021.
I think that automation is the wild card here, because that's being able to do the automation requires that niche skill that you were talking about on the previous slides. But it also is the wild card to actually maybe keeping the staffing numbers from increasing even more.
Yeah. Okay.
All right, so let's talk about the work from home. So I'm betting that most of the people we're talking to right now are actually in their home offices. I know I've been working from this home office for 23 years, so that's probably more than most of you guys have been doing, but it certainly changes the whole perspective on the work role and the work relationship. So let's talk about what we're seeing here, Prashay, in terms of the actual numbers, and then let's talk about how we think that's going to impact. We'll progress that into the conversation around productivity.
Sure. And some of the insights on this page, they're essentially based on a key issues survey, which we conducted with leading enterprises, leading GBSs across the globe. What we essentially saw is that there is a significant change in what companies are predicting as a work model for 2021, right? So companies, there's definitely an increase in the expectation that there would be some employees which would be returning full-time work from office, but there's a significant decrease in full-time work from home or remote working for companies as well. Essentially, where we are seeing the greatest increase in the working model in 2021 is the hybrid model, the mix of remote working as well as work from office, right? How you do this, is this on a rotation basis? Is this on an exception basis that companies are still trying to formalize? But we are seeing a greater shift and adoption of this hybrid model. There are many aspects of this which companies still have to iron out. Aspects especially around, let's say, measuring the employee productivity, keeping employees engaged, and they are using a wide variety of tools and technologies, or at least planning to in the near future. Last year, there were more quick fix approaches, but going forward, we do expect that more and more technologies to increase employee engagement, to measure productivity will be a norm. And Sakshi, why don't you talk about some of the new technologies which we are seeing companies increasingly adopt in this space?
Sure, Prashay. So I think the main point that we are trying to make here is that the focus on employee experience will be paramount. Last year, everybody went into work from home as a quick fix and something they had to do, even though they were not well prepared. But now that companies have experimented with the model and have been in this model and completed a whole year, now the approach is going to be much more intentional. what that would mean is a lot of investment will go into enhancing employee experience. And one of the ways in which organizations will achieve that will be by deploying a lot of softwares and tools. For example, virtual interview softwares, employee onboarding softwares, remote learning softwares, etc., which will enhance the employee experience and probably make it similar to what an in-person experience is. What I would like to hear from all of you today is, if your organization is using any interesting tool which enhances your employee or even prospective employee experience, please share it with us in the chat window. We would love to know what your organizations are using, how they're finding it successful, unsuccessful, challenges, etc. So use the chat window and share any interesting tools and softwares that your organization is using. It could be in the L&D area, it could be in onboarding area, it could be in the interview area, knowledge management, share, any of the employee experience areas, and we would love to hear about those.
Yeah, Sakshi, I'm looking at this slide here and I'm recognizing, I don't even recognize half of these companies. Certainly you understand the ones on the bottom left where you and I live, and many of the others around the scheduling and stuff like that. But some of these things are just completely new logos and new value propositions that I think are going to be exciting, and some will be fantastically successful, and some will probably fade into get kind of wrapped into something else. So
yeah, and Michael, I think there's not a lot of research available on these tools. So finding the right tool that matches your organization needs will be one of the key, decisions that many stakeholders will go through. Assessment of tools, evaluation of tools, etc. And a lot of, I think, investment and time will go into assessing these tools, implementing, and so on and so forth.
Yeah, Sakshi. So my first tool that you don't even have that one on here was called Federal Express, when they delivered my floppy disk at 10:30 by every 10:30 in the morning when I was working from home back in the good old days. All right. I know I'm dating myself there. All right. So let's talk about the last trend here, and that really goes into the productivity here. So as we think about this, certainly we've gained a lot. This has been a kind of a rolling topic for us. When we first started talking about productivity, everybody kind of said, yeah, it's a good thing. And, we don't have to do the commute. So some of you were doing 1 hour commutes to and from, or some were doing 2 hour commutes, or 1 hour each way. And so we got that immediate benefit from doing that. Some people were excited to be just having a job and trying to get some level of normalcy. So they were, the productivity was up. Over time, we've heard that to fade. Okay. So, Sakshi, talk about how people, and the whole thing in my mind comes down to, how do you measure it? How do you know, if you're better or worse than you were before, and how do you manage that? So I think that ultimately comes down here. We're gonna need to go from wishful thinking to some facts and some practices.
Yeah, so just to recap what was happening in 2020, and Prashya will talk a little bit more about how to measure productivity, what kind of different options are available to the enterprises. Just to talk about what we saw in 2020 to set the context, we asked people at 2 times within the year. As you can see, some just after pandemic was at its peak, and probably in the later part of the year. And we asked, what are you doing to measure employee productivity? And if you can see the chart, the single biggest source of productivity measurement was basically trusting the employee. So assuming that employee is putting in the right number of hours, putting in effective hours, is being productive in those hours, or they were using check-in, status reports, etc. The actual implementation of productivity measurement tools was really low last year. I think since then, the thinking within organizations has evolved a lot, and that's why we are calling that this particular space will move from conversation to real action in 2021. We have a quick poll coming up on the next slide, where we would like to understand how where your organization is in this adoption journey of productivity. So I'll hand it over to Michael to talk about the poll, and then Prashya will talk about various tools.
All right, so let's open it up to the audience here. Where are you at in the productivity measurement tool adoption? And so go ahead and click an answer here. And All right, so this one's a horse race. I'm looking at it. We've got about a third of you have answered it. Let's see if we can get a couple more votes in here. Okay, now votes are really accelerating. Okay, so there's two that are not all right, not showing the results. Okay, so let's open it. Let's share the results here. Okay, so we actually have a tie for first place here almost. The implemented productivity tools at scale already. So some of you feel like you're pretty confident in that. The second answer is exactly the opposite of that, not planning to implement tools to measure. So there's a bifurcation right there. And the next answer is in the evaluation phase. So really, that's actually a really good bifurcation of the marketplace here. Fully implemented, not planning to implement, and evaluating implement the top three answers. So
for those who responded with implemented tool at scale already, again, would love to know what tools you are using. So use the chat window and share what tool your organization is using, and we'll be happy to hear how you're feeling about the tool.
All right, Prashay, any thoughts on these numbers here?
Yeah, Michael, the one which I was surprised with was not planning to implement a tool. We do understand that many organizations believe that trusting the employee is also a great policy, right? You really don't need to micromanage and monitor all of these things. But then you really lose out on all the amazing capabilities which this data analytics provides you, because you can essentially use these tools to compare, contrast teams, different locations, different models. And yeah, I mean, this does not really come at the cost of trusting the employees, but essentially another quiver in your arrow of things which guide your decision making into workforce models.
Okay, all right. Well, this was obviously an area for further monitoring for sure.
Yeah, sure. So, Michael, as you discussed earlier, right? Organizations for a long time were focused on labor arbitrage, automation, but 2020 really brought the spotlight to workforce productivity. It's being seen as the next frontier to augment service delivery, as well as drive organizational efficiencies, right? There are multiple aspects of productivity measurement and enhancement which organizations are planning for. At the very basic level, it's about trying to understand what is the active time, how much time should employees work with. Some organizations are experimenting with four weekday work as well, right? How many hours should a person work? Does this differ by locations as well? In fact, when we got the information from leading Fortune 500 companies, they stated that as much as 40 to 60% of the total employee time is lost to non-core activities, things like meetings, emails, more than the number of work, more than the time which is allocated to the actual expectations of BAU. Another factor beyond active time is increasing efficiency and throughput. We saw wide variations in top performing and bottom performing employees. There's variations as high as 60 and 80% between top 20 and the bottom 20%. Again, what it essentially suggests to the organization is, if you can better understand why are the ones at the top performing better than the others, what are their work processes and how they are different from others, that kind of an insight can lead to better L&D and training for the broader organization as well, right? And most importantly, another lever is, of course, improving effectiveness and quality, right? Because it doesn't matter if you spend the optimal time and with high efficiency if the work quality is not that great. So in ideal state of world, all of these levers should be measured for employees as well as different teams. And that is something which we describe in the next page as well, of what are the different tools and options available to enterprises out there as they look at different kinds of productivity tools and different capabilities of tools. As we discussed, there's that traditional time monitoring, started from key cards, which you used to track employees in and out time with. Of course, it's more digital now with things like Nexonia and Timesheet. But this has limited insights on the efficiency and effectiveness of employees. So we are really seeing companies move to more advanced tools. At the second stage, we've got things like activity monitoring, multiple kinds of tools which really see what's going on the employee's desktop and provide analytics around that. But at stage 3, we have things like output monitoring, which measure the efficiency of some of these employees. It does provide you inputs on core, non-core activities, providing more data to managers on how their employees are effectively spending the time, right? But what will really be a good solution for enterprises is a comprehensive workforce analytics tool. Because if you're already measuring time, effectiveness, and output for employees, all of these things, when you feed it into your big data machines, can provide you good analytics around the workforce. And there are multiple tools out there in the market. They are essentially developing further their capabilities as well. Things like Sapiens, Prohance, Blue Optima, Terramine, which kind of have these capabilities where they are able to correlate time, output, effectiveness, and provide you those direct insights on how workforce should improve. Now,
yeah, and I think a lot of this varies by the industry too that you're in, because I mean it's way different depending on the business model and how you're serving your clients.
Absolutely, Mike. And I think all of us are looking forward to remote working, hybrid working. Productivity measurement tools would be an important part of that future workforce model as well, right? So yeah, something which we see increasing adoption. And I think our polls also reflected that many of the attendees have implemented this at scale within their organizations.
Yeah, and we don't want to see the trend go too far the other way where everything's trying to be measured down to a scientific question. I think it's going to be much more of an art than a pure science. I think you got to really be careful that we don't oscillate back the other way and trying to over measure things too. So all right, so let's do a quick recap of what we've talked about today in terms of the trends. Certainly we do believe the GBS organizations will play a significant role. They're not going away. They're getting more sophisticated. The maturity is going up. They're taking on outsourcing, as you see in the second trend, is becoming a bigger part of the overall GBS playbook. And we've seen the outsourcing industry thrive in this market. That's good news for everybody, because you don't want to see a failure of the industry as a whole. We do see winners and losers there, and happy to talk to you about that if you're interested in seeing. Not everybody has come through this equally. So talent retention was easier in 2020. That's the good news. I think with that pent up optimism we keep talking about, I think that will make 2021 a little bit more interesting in terms of the attrition and the retention. And as labor markets begin to tighten again, be prepared to think about how you're going to change your perspective on engaging talent and recruiting talent. Work from home is not going away. So we talked a lot about productivity, but I think the ultimate thing is, just like we talk about improving the customer experience, improving the employee experience. I worry a lot about culture on this one, creating the culture, especially for new employees that we're bringing on that are, kind of right off the school bus. How do they get embraced into the organization? How do they identify with the organization, and how do they become, your future of your organization? That's not something that's trivial, and I think that that leadership team should be really focused on that. And then we wrapped it here with the last trend, which is employee productivity moving from that conversation to action. So yes, we want to all trust our employees, but I think we also need to have a way to have a speedometer, have a dashboard of sorts that understands, what we're getting from the workforce, and where we can look to optimize it, and where we can look to make improvements over the near future. So with that, I want to thank. We have a quick poll here. So not a quick poll, but really an offer for this is for enterprises. And so we always know that we get a lot of participation on these webinars. We also know that people that get a little taste of our data are generally impressed. And so if you're an enterprise or a GBS organization, and you're interested in understanding a little bit more about a certain market segment and where we see cost and the cost benchmarks and from a talent perspective in one of those 4 areas there, click the box there. Also, if you look in the chat window, I believe there will be there it is, a place to click on to select your functions and your locations. And so that just makes it really easy. It's a real short form. It'll take you about 60 seconds or less to fill out. Just click the functions and the locations you're interested in, and Sakshi or Prashay or somebody from their team will be in touch to give you those results and talk through with you what we're seeing in these. Of course, we've got lots of other functions, lots of other locations that we can discuss, but these are just kind of a way to get started. So, all right, so we have lots of questions. We have pages and pages of questions here that came in. And so I'm going to start with this one I thought was pretty interesting. Let me go back to here, scroll back up here. Where we go. Okay, so if both outsourcing and GBSs are growing substantially, and we kind of see the enterprise as a whole kind of in a flat mode or small tiny increases, where is this growth coming from, Sakshi?
Sure, Michael. So I can address this. I think the first point I would clarify is what we said is the both are growing. They have not grown in 2020 at the pre-pandemic levels, but they have also not shrunk or declined, which is what we see, in terms of global economy. So I would just, be cautious with the usage of the word substantially. We are seeing growth, but it is nowhere close to pre-pandemic. But there is nothing to be disheartened about also as far as this sector is concerned. It really showed great resilience and it grew in 2020. As far as the question on where this growth is coming from or what is it that is declining, I think if you just look at the data at a GBS and outsourcing level, that will not give you the answer. We have to get into the details of where, which segments are growing, which functions are growing, and which verticals are growing. And as we mentioned, tech and comm really performed well. Manufacturing also did fairly well as far as outsourcing is concerned. The verticals that got most impacted were hospitality and tourism. So didn't see a lot of deals, and it is probably very obvious the way these sectors performed in 2020. Retail was also impacted, and I did talk about essential and non-essential retail, where non-essential really got impacted, and there are so many bankruptcies already being filed in the retail sector particularly. Transportation and logistics got impacted, so that also declined in 2020 as far as both outsourcing and GBS is concerned. If you look at from a functional standpoint, ITO stood out with lots of deals. Digital transformation led to growth, from a geo perspective, when we had analyzed the data, there weren't many differences in the trend compared to the previous year, though there was a slight spike in the deals coming out of APAC and Europe, but it wasn't material enough. But yeah, we did see a little bit spike as far as adoption of the outsourcing and GBS model from Europe and APAC.
Yeah, and Sakshi, the way that you asked that question, that we asked that question for the GBS, it could be that they're basically assuming new functions within their organization, so the scope of that organization is increasing as well. So that will bias the number up. Not only hiring, but also assumption of other functions and processes within the organization. So, it's all good news. It's just, we don't want to overstate that in any sense. All right, there's another question on what are niche skills?
Yeah, so I think this is probably in reference to the slide where we talked about how talent market is going to be tougher for niche skills. And think of, agile coach, full stack engineer, AI, ML engineers. On the BPO side, it could be risk modeling experts. Those would be considered as niche skills, whereas your, generic skills would be like, application developer, service desk agent. On the BPO side, it could be an AP/AR associate. So, that's how we sort of categorize a generic skills versus a niche skill.
Okay, I see a question here for you, Prashay. For employee productivity, how do these tools affect employee morale? And does a comprehensive solution lead to more positive, negative morale? And how should this trade-off be perceived when considering implementation? And I'll emphasize my point earlier, trade-off here. It's a balancing act, right? But what are your thoughts?
Yeah, Michael, you're right. Some of the tools may seem to be intrusive, but it's about the trust which the employee also has in the organization, right? many organizations which we see actually do this at an anonymized level right now. So reporting and analytics, which they see is more at the overall organization improvement level and by teams, not specifically at individuals. But we've not seen any reports of employees saying that this has negatively impacted the morale. In fact, on the other hand, we do hear multiple employees say that when the information on their own performance and their time utilization was made available to them, it was actually a great insight, because people don't think and track their time spending that way, right? So it was definitely a great insight, which helped many employees with their own self-improvement.
Yeah, and again, I think it's going to go back to the role. It's going to make a big difference on how you do it. The technology doesn't solve anything specific. It allows you to have that conversation, but I don't think, again, don't overdo it. Okay, Sakshi, I think this one's a good one for you. As GBS moves from helpers to shapers, do you really think measuring productivity only from turnaround time is wise? Are there any other dimensions that we have not thought of that showcase value cycle instead of time motion studies? And that's again, I think we're all a little skeptical of the time motion ones.
Yeah, I think you can measure the value creation, or loosely let's call it productivity and value creation at several levels. What we talked about today was measuring productivity at an employee level and how much value creation or efficiency, effectiveness is the employee giving to the system. That's one way of doing it. There are rudimentary ways of doing it where you just fill some timesheets and tell, I spent 4 hours on a project, and that was probably very efficient because originally I was supposed to spend 6 hours, but I was able to finish my job in 4 hours. The next evolution, as Prashar talked about, you could track keystrokes, you could track outputs, you can track outcomes. That is all at an employee level. What we also do, and for our clients, is basically measure and track how different projects and assignments within the GBS organization are creating value. Many times we see GBS organizations focusing only on cost arbitrage when they articulate their value proposition to the enterprise. But some of the matured ones, they are able to articulate their value addition through higher effectiveness, more productivity, higher efficiency, risk avoidance, and so on and so forth. So employee productivity is one way of measuring organizational productivity, I would say. But specifically for GBS organization, they can also measure the value that they have created, which is beyond cost arbitrage, beyond placing work to lower cost locations. That's another way that GBS organizations can articulate their value proposition.
Yeah. And this is not just about time and motion, right? Workforce analytics essentially can help guide what trainings have worked better. One set of employees who undertook a training, has their performance improved vis-a-vis others. Similarly, it can guide outsourcing contracts, sourcing models on what time zones, which locations, which teams work out better for a particular task, right? So let's not think about it just from a time and a motion point of view, but more enhanced, comprehensive workflows and work process analytics.
So you're not saying a pressure sensor on my chair is the right answer?
Absolutely not, Michael.
All right, sounds good. Hey guys, this has been fun. We're gonna need to wrap right now. We did get a whole bunch of questions that we'll try to get answers to individuals. If you gave us your name, we'll try to make sure we reply back with the answers that we were not able to get to in the live session. Certainly, there's lots of information on our blogs and on our website. So actually encourage you to get out there and look at our content and links. You have our information. Happy to talk with you. We're passionate about this topic, and if there's anything we can do to help you, we'd be delighted to do so. So with that, one other little tidbit here. I'm really big into the pent-up optimism. And what I think that means is we all need to remember to get your holidays booked and book them early, because I'm going to be there at the beach with you, and make sure you get your chair as well. So thank you.